Beer doesn't last long here.
I can imagine. Yeah.
Takes a massive story hole, right?
It was not a story hole. They ruined it by making it.
Well, they addressed
Before, the Empire had hubris. Now it's this, there was a secret plan.
And he's like, I'll come on the show. He's like, but I want to be on episode 100. I'm like, we do this every other week.
I want to be on episode 100.
Have you watched any of our episodes?
I've watched some of them, yeah.
Don't lie.
No, I have. Yeah.
How prepared does it seem we are?
Seems fine.
Exactly.
Yeah, I don't.
You got all bent out of shape because apparently I stole his brilliant idea and used it on the Animal Spirits podcast.
I don't get bent out of shape for him stealing my good ideas. If I got bent out of shape,
all you do is get bent out of shape.
I'd be bent out of shape all the time.
All right, give me 1 second. I'm going to grab some chapstick and we'll go. Because your lips look terribly dry. I'm not giving you mine.
I'm going to do that too. We're going to go this whole show and not address the way Tony's dressed.
I'm gonna.
How I dress? Like I look nice.
I'm gonna go another thing.
This is travel.
Casey's
Tony
like,
right
why aren't you wearing a t-shirt or a polo? It's hot out. And I was like, no, Tony's got to be the. Oh, I do the chapstick.
You literally laughed when you did the chapstick.
No, I left the powder in my face a little bit.
All right, silence all the phones. Set everyone to DND.
What's up, everybody? Welcome to another edition of the Planning Desk Podcast. I'm your host, Tom Burmeister, joined as always by my co-hosts, Tony Steep and Mr. Purple. How you doing, man?
Good, sir. How are you?
Good. I'm super excited because we are joined live in person again in the Navaplan studio by an in-person guest, this time one of our faves, Michael Antonelli.
This is like 3 weeks in a row that we have a guest. And yes, Michael Antonelli is a good friend of both you and myself, and a good friend of the firm, actually, because Baird, for whom he works,
Market strategist
at Baird, is a customer. But that's not what we're going to talk about today. We're going to talk about a lot of other fun stuff. Michael, thanks for joining us.
Hey, listen, it's nice to be in Paisley Park. I hope we get a rendition of Raspberry Beret here. I never thought it would be this purple, but it is this purple. Yeah.
It is purple. We have a live background for me. That cost us just shy of like $37,000, but it was worth every penny.
Prince would be proud.
So, first things first, local guests. The rule is you bring in a beer, a local beer. This time, looks like you got spare time.
Yeah, I really enjoyed this segment on your podcast, the bring in the local beer thing. I did. I brought in spare time a hazy IPA. I mean, who has any time for these bitter IPAs? Forget it. Just bring the juicy ones. And I did Good City. I got a great story about Good City. I don't know if you guys know this. I did the tour, right? There's the local brewery. I did the tour, and it's a great story. It was three guys who just sat around one day and said, we should start a brewery. So how many conversations have you ever had with like a couple friends where you're like, hey, listen, the work thing's going well, but maybe we should start a restaurant, or maybe we should start a bar. And you're like, yeah, we'll do that. Right. Mm-hmm. These guys actually went through with it. They actually said, let's start a brewery. They went through with it. I think Good City is one of our best kind of local beers. I really, really do. It's the story inspires me. The beer selection inspires me. I think all of their locations, especially the one by the stadium, is just awesome. So
yeah, they have multiple locations. They built one by the Bucks, right? They have a beautiful building at the Bucks Fiserv Forum. But yeah, such a cool story. And my favorite part about the Good City beers is like the diversity of the flavors. Like it's different.
Yeah,
right.
It's different for sure.
Very creative. Very creative. Okay, so thanks for bringing in the beer. We are drinking some of the Night Rain Porter from a past episode, and don't worry, it is not 10 a.m.
Anymore.
It's actually closer to noon than it is to breakfast beers. Regardless, my favorite segment now about learning a little bit more about Michael Antonelli with a random set of questions that we've written over the last few weeks.
Go ahead.
Go first?
Yep.
All right. Toughest one. Who is your favorite host of the Planning Desk podcast?
Yeah, listen, that's wow. I mean, I am good friends with Tom and his wife, but Tony is a big fan of the same pop culture movies I am.
Yes, there you go.
The ones in outer space.
Yeah.
It's tough. What I'll say is that you both have your strengths and weaknesses, and I do appreciate the invite. So I'm going to say both of you.
All right. Now that we can continue, let's go with.
You're just
different.
Let's go
very,
with
very different.
Dream vacation spot that you have not yet been to.
Okay, that I've not yet been to. So that's a good question. In COVID, there's been lots of thoughts about let's get the heck out of here. Let's go somewhere else. I think the one place I've always wanted to go to that I've yet to go to, I've flown over it a couple times, is Tahiti. I think the South Pacific. I got like a real kind of tiki passion. Tiki as both a type of bar and type of drink, but some of those little overwater huts. Could you imagine? I mean, I know it's like probably a 20-hour flight from here, but it's just like an island in the South Pacific sounds like a great.
It's like fantastical, right? Like just the thought of it seems so surreal.
Absolutely.
So, favorite hobby?
Favorite hobby, probably, and I have this in the intro that I do to clients when I do client events, and I'd say my favorite hobby is being a semi-professional bartender. And that means that I'm not yet willing to put my whole life into being a bartender. I have a lot I still need to accomplish with Baird and for our clients, but knowing a friend who can make a good cocktail, you always want to invite that person over.
Yeah.
You always want to be next to them.
And that brings up a good point. You've never invited me over.
We're there.
Every Friday I get these messages from you with photos of these beautiful drinks you make.
Yeah.
And it's like you're rubbing it in.
Yeah.
And then I never get the call.
I think we're close enough. I think after today, I think it's going to be a regular occurrence.
Because you live in like a different country compared to.
We do. We need a passport to get to Whitefish Bay.
Yeah.
Let's do some easy ones. Hometown.
So my wife and my family live in Whitefish Bay, Wisconsin, which is just north of Milwaukee. We moved there in 2007 after I graduated from Chicago.
And where'd you grow up?
Kind of all over the place. I was the child of an IBMer.
Okay.
And IBM stands for I've been moved. So I was born in California, moved to Oregon, moved back to California, lived in the Bay Area for a little bit, moved to Connecticut, lived outside of Fairfield in a little town called Trumbull, Connecticut, which won the Little League World Series one year. That's one of the claim to fame of that town. Moved to the Midwest for school. And when you move that much, you kind of generally never think of someplace as your hometown. So I kind of latched onto Chicago as my hometown after graduation from my undergrad. I met my wife and spent like a big month. So I'm kind of from all over.
Okay. Good answer. Yeah. How about last book you read?
The last book I read, it's probably Morgan House's book, which is Psychology of Money. That's probably the one that I've leaned into the most during COVID because I found it not only educational for my job, but I found it to be an easy read. It was quick and easy.
And Morgan makes it really digestible, right?
Yeah.
All right, this is the penultimate question, probably the toughest question.
Ready? Is there math? There better not be math.
No math involved. Your favorite Star Wars movie?
This is a layup. I think this is a layup, and it's not the one that most people would say. If I have to just lock myself into the movies,
just the movies.
Yeah, I can't. If I can't kind of branch out, this is. I don't know if this is a spicy take or not. I think Rogue One is probably the best Star Wars movie. I think it is. It really is.
It actually. We talked about this, and I knew you were going to say it. I know you like Empire.
I think it's lazy now to say Empire is the best movie. I think you really have to lean into it.
Thank you. It is actually Rogue One. It is Rogue One. Why are you laughing?
I hope your listeners know how passionate we are about this.
You're not even a Star Wars fan.
Yeah.
Guthrie, you have no.
By the way, my kids are Marvel fans too. I have a big fight about that. Like it's a tense moment.
One day they might cross over.
Yeah, I hope they do.
One day they might cross over.
A lot of the movies stink.
If they work at Advice, and they can watch them every Friday. So maybe we can get some internships.
I'll put them on an internship.
You just go. Hey, you know what? That's a great segue. Talking about Star Wars into the next segment makes perfect sense. Talking about the market, right? Market strategy, kind of what you do at Baird, but more so just how we take market news, how we digest it, but also how we interact with our clients and how that really kind of will solve that problem. So when we get back from the break, we're going to talk with Michael about all things market, all things technology, just a whole bunch of stuff right when we get back.
So we're back in the Planning Desk podcast, joined in person by Michael Antonelli, market strategist at Baird. Thanks again for joining us, Michael. I also wanted to, we got to know you a little bit in the rapid fire segment, but I think you also have a fascinating kind of trajectory when it comes to your digital brand. And it actually started for me, one of my first years here, when your medium of distribution was actually just an email blast. And I always look forward to not only the very interesting narratives about the market, but also the links at the end of those emails, where it would be just random stuff on the internet that like you wouldn't see on your typical Twitter feed or things like that. It was just like, check this out, this is awesome, or like, do you think this guy survived this fall? Just random stuff like that. But it has now taken on just and rightfully so, because it was too good to just kind of keep in an email blast like that, even though it got to be pretty big. But now on Twitter. The Bull and Baird is also a blog. Fill in any gaps I've missed. But tell us a little bit about kind of your career evolution and how your digital brand kind of intersected with that.
It was interesting. So I started at Baird as an institutional equity trader. I didn't start as a market strategist in the private wealth division. I started as out of the University of Chicago. I had an analytic finance MBA. I thought, I have all the answers now. I have this $200,000 degree. I took 20 classes. I know what binomial options pricing model is. I know all this. I'm going to be the best kind of equity trader on the street. And then I realized that the real world's certainly different than the academic world. And I realized that, if I wanted to write something, if I wanted to create something to engage with our clients, I could fill it with technical terms. I could fill it with, data from the market, but nobody would read it. I mean, how many emails are written a day, newsletters written a day about wrapping up with the market? That's 2 million. So what I did is I just started to lean into being a normal person. And I'll tell you guys, what a secret that was. Yeah. What an absolute secret it was to just talk like a normal person. Wall Street prides itself on complexity and in complex terms. And I just wanted to write in a way that people would open the email and read it and be like, oh, Mike relayed the market to a Game of Thrones episode. Mike relayed something that happened in the stock to the Packers losing on a last minute kind of touchdown. And it really hit. And I grew from 100 people to about 5,000. And, think about this. Let me just give you an example. Let's give your listeners an example. So let's say the following statement is true. Let's say the statement's going to go out in a newsletter or on the media. So the stock moved higher today because of a gamma-induced short covering rally in the stock. So you could write that. How many normal people would understand what that meant? Probably, I don't know, close to zero. Or you could say a bunch of people made the wrong bet and they had to get out of that bet. Those are two different ways to say the same thing. Wall Street prides itself on saying the former, but I wanted to pride myself on talking like a normal person. And so when I thought about my digital brand, when I thought about my engagement on Twitter and representing kind of my views on the world, I wanted it to be approachable. That's the key here when it comes to content and interacting with not only a sophisticated audience, but a wealth management audience. And that is, say something that they can understand. Keep it short, digestible. So that was kind of where my brand started and where it kind of ended today. So you're right. I write on a blog called Bull and Baird. I have a Twitter account that I'm getting close to 20,000 followers, so I must be doing something right. I think the audience is getting there. But I want my brand to be not only insightful, but approachable.
Yeah.
So it's actually funny. You bring up your Twitter. 18,000. After this show, you'll probably eclipse 100,000 mark. That's probably going to happen.
I hope so. I got to be Doug Bonaparte. That's what I'm at.
But here's what I love about following you on Twitter. And well, there's a few things about Twitter that I love. One of which is you can interact with people that normally would never be able to reach out to, right? But with you, not only are you digestible in breaking down complex investment conversations, but like you're just you. You know what I mean? Like you have, first of all, some of your takes are awful, right?
It happens.
But some of your takes are great. But the point is, it's Michael.
Yeah.
It's not some guy, right? It's not some guy on the 13th floor of Baird's offices. It's not, or whatever floor you're on. It's not this guy that knows all this stuff. It's Michael, right? And that is so approachable.
The bartender guy.
Yeah, the bartender guy, right? But that's so powerful. You've done such a great job, and you unlocked that power of Twitter.
When I think about a social media presence, and when you think about what works on social media, it's authenticity. It's just authenticity. And I'm really fortunate that Baird gives me the space and the support to be authentic on social media, on my blog, on Twitter. Like that's really important. And I'm not the kind of person that wants to take that for granted. I want to be able to express my personality, but also in a way that makes Baird proud. You know what I mean? And I want that to be part of what I do. And that's why, I find that if you put market stuff out there, you get very little engagement. If you mix market stuff with a little bit of personality, you get more engagement. Some of my biggest tweets haven't been market related at all, but that's just how social media works.
Yep.
The way I view it, and I think the way a lot of people view it who are smart and are using it well, is create fans of your content, convert some of those fans to clients. I think that's how the best advisors are using social media and Twitter, and how I try to use it on behalf of Baird is put out good content, be a person that is relatable, and try to help those people find you and find their way to Baird as a client.
And there was a bit of a rough go at first, right? Wasn't there, like when you kind of started at Baird, there was a bit of like wait, what you're on Twitter?
Yeah.
Like there was a little bit of like it wasn't like a challenge, it was more of a question, and you've proven that the power of social, the power of digestible content works.
Definitely ahead of his time.
Yeah, absolutely.
Yeah. So I think speaking of clients, I remember just being fascinated by the fact that I had heard you had moved into the private wealth arena. Same company, still with Baird. But tell us a little bit about that transition, because I mean, you are so relatable, and I think you bring so much to those interpersonal conversations. That wasn't necessarily your start at Baird. So did that opportunity find you? Did you go find it?
It's great. It's a great question, and when I think about the arc of my career, one of the things that I wanted to remember, one of the things that I wanted to have as kind of my guiding force is that you constantly need to be reinventing yourself in a career. You can't just get into a rut and say this is gonna carry me for my day. Baird has some of the best traders on the street. I'm so proud to have been part of that institutional trading unit. I know your wife, Katie, who I worked with for 12 plus years, and I loved working there. I really did. But I really also enjoyed writing. I enjoyed engaging with people. I found that speaking wasn't difficult in front of an audience. I found that creating stuff that really resonated with not only institutions but private wealth clients worked. And I'm like, I would love to bring this to Baird's private wealth division, which is its largest division. We have institutional, we have investment banking, private equity, asset management, all those things. I wanted to bring that style to the wealth management unit because I'm passionate about the future. I'm passionate about where this is going. And I want to be part of a unique environment. And Baird said, listen, we love your style. We love your takes. We love the way you're writing. And you go on my blog. I don't write like most normal people. I'm not out there trying to talk about the change in earnings estimates and GDP. I want to relate landing a rover on Mars to being optimistic about the future. I want to land the fact that wealth management is about doing what you should be thinking about and not what other people are thinking about. And Baird was gracious enough to bring me on and support me along the way. And we have a great marketing department. We have great leaders. And it's a testament to them saying, let's take this trader and turn him into something else.
Yeah, absolutely.
And they even let you on the show.
Yeah, exactly.
I don't know how they let you on this show.
Yeah, but it took me a while.
I don't know what he's asked yet. So let's transition then into the markets a little bit, and tell us a little bit about how you go about kind of formulating how you communicate, because you still have that academic background and you can still kind of consume all of that technical information. But then tell us about the thought process of taking that, kind of filtering it through your brain, and then kind of putting it into that digestible format that you're so famous for.
So that's the key, right? That's the key. It's taking what's moving the market. It's taking what are the big themes and putting it in a way that a wealth management client can digest it and understand it. So I'll give you another example. I'm big on examples. I'm an example kind of guy. So here's an example. So why does the market move in the short run? Why does it move? Well, you could say that the market moves in the short run because economic data was worse or better than expected. Earnings were better or worse than expected. Like what's moving it? Is it a headline? Is it an election? What is it? Well, in the short run, we're talking like days to weeks. The market moves on, are things getting better or are things getting worse? And that's kind of easy to digest. Is the world getting better or is the world getting worse? Think about the bottom in April, the COVID bottom, March into April. Economic data was the worst it's ever been. Like in history, you're talking about PMI, you're talking about stuff in the 30s for PMIs. It's hard to get worse than the worst of all time.
Sure.
So things were starting to get better. They weren't getting worse anymore. The market bottom. In the short run, the market trades on are things getting better or are things getting worse. So I want to lean into approachable stuff like that in both my written work and in my kind of presentations. And I want to continue to use that to build Baird's brand with their wealth management clients. And that is, gosh, if I have a question and I go to my advisor, and or if Mike is going to do an event for me or I'm going to read a piece of Mike's work, I walk away from it going, I get it. I understand. I'm not walking away with, I got 5 other questions. Because I think that the worst kind of experience a client can have is coming with a question and just leaving.
Yeah, no, it's actually, so this is so topical because we're shooting a few days after we saw a crypto correction of about 30%, 40%, right? And of course, the market was, misbehaving as well, right, in some situations. But what I love about, and I want to reference this, you wrote this You Do You blog post, and I wish that every investor could read that, because stop it.
Yeah.
Stop looking at the day. Like stop and give us that analogy of like the day-to-day day trader versus what a client should be thinking.
So think about it. So you could open a paper, you could go on CNBC, you could go on the internet, you could look at the price of, let's just pick my favorite. So one of my favorite stocks, Disney, just because I'm a big Disney fan. We look at the price of Disney stock today. You and I look at it today. Say that you're a day trader, Tony. You're a day trader. All you care about is what Disney price does today. Is it going to go up? Is it going to go down? Maybe you care about where it goes tomorrow, but you're a day.
They looked at the mask mandate, no more masks.
Yeah,
so
no more masks.
Is that going to tank?
Like you're like, I'm making these moves based on like how many people are going in the entrance. Mm-hmm. I am a long-term investor. I am building wealth for retirement. I'm building wealth for college education, and I'm looking at the price of Disney stock for the next decade. You are attaching your strategy to Disney stock. I am attaching my price to Disney stock. Who's correct? Who should we be listening to?
Right.
Listen, I think you're a smart guy. I really do. I think I love your takes, and I think you're a smart guy. But you're in it for a different reason than I am, and that's why I wrote this blog. You do you, which is stop caring what other people think the price of something should be. First of all, they don't know. Nobody knows. The market is a complex, adaptive system. It changes instantly.
Sure.
So stop attaching what somebody else is looking at to what you're looking at. Focus on yourself. If you can do that, that's, my friends, this is hard. If you can do that, you're one of the best investors out there.
Well, it's funny. Two points to that. Which, the challenge I think we have is that the day traders are the loud ones.
Yeah.
CNBC, all the red on the screen, it's a lot louder than you and I and others saying you do you. So that's one of the challenges we need to. So we need to get more your kind of approach out there, like louder, more vocal.
Well, let me give you a crazy stat. So
Please.
It's been said that the average human today consumes more information in 24 hours than somebody in the 1800s did all year. Jeez. Think about that. Like,
I'm depressed.
And this information is just crushing to somebody. Now imagine you're trying to do that while raising a family, and you're trying to do that while building a business, or you're trying to do that while while your kids are screaming in your house. Like, it's hard.
Yeah, and I think what's great about it is that I think a lot of people, when they hear "don't worry about the short-term behavior of the markets, we're invested for the long term," they interpret that as like, don't watch CNBC, unsubscribe from the Wall Street Journal, all that kind of stuff. But I actually look at it. I think it's an even more beautiful thing that I still watch CNBC every day. I'm not a Wall Street Journal subscriber anymore, digital only. But I think about my mindset when I'm able to read that, when I read that stuff, and it's just purely from purely interest, and like my emotions are so level, and I'm so, it's such a different story when I'm not living and dying on every dip, and I think that's what people need to understand is like you can still consume all the information. It's just how it changes your behavior and your mental state.
Humans look for answers in all sorts of different ways, and they look for answers in what their friends are doing. They look for answers on what's happening on TV, what's going on in the news. So anything that's the loudest is obviously going to have a huge impact on them. And so not only am I a big fan of writing and speaking like a normal person, I'm a big fan of behavioral finance. And inside of Baird, I want to carve out the segment of behavioral finance so that we can engage with our clients about decision science and what are the things that are hurting their performance the most. Is it the news, or is it how you're reacting to the news?
Sure.
Mm-hmm. The Baird Behavioral Finance Institute, powered by Nav Plan. I think we can
powered by Nav Plan, powered by Bull and Bear.
Powered by Bull and Bear, yes.
Yeah, and I think what another thing that's interesting is and I just want to point this out, and I know you know this, but if you were to follow the day traders of CNBC or these folks that do things, you would have missed one of the best upswings of all time last year, right? Like people were pulling out in March because there was a fear mongering going on. People were pulling out of the market in the equities, and they lost a significant amount of wealth because of that upswing.
So the largest 12-month gain in the S&P 500 since the Great Depression. Mm-hmm. If you look at from March of last year to March of this year, the largest 12-month gain since the Great Depression, I think it was a little over 75% in a 12-month period. And there have been multiple examples over the past 12 to 16 months of why an advisor can be so crucially important. Not only the COVID crash and the fear surrounding it, but the election. The election was also another moment where an investor had a chance to make a decision based on some gut feel that ended up being almost instantly wrong. Post-election, the market had its single biggest post-election gain since the 50s. Mm-hmm. So there were two instances where an investor could have really gone wrong.
Right. I mean, I remember looking at I have no money, by the way. Full disclosure, I have 5 children. I have no money. I was looking at
about your wine bill last week.
It was okay. I remember logging into my 401k around March or whatever it was. Mark was about, and it looked like it wiped away 4 or 5 years of work. Right, like when you look at the markets, of like 4 or 5 years, and
so you
obviously,
walked to my office.
Huh?
So you walked over.
I think I did.
I actually was looking at mine when you walked.
I feel like we talked about this,
but purely for fun. To be
right. It was fun because I would not have done anything, right? But that's because I follow you on Twitter, but also obviously I believe in the power of financial planning and
I think we joked about can you imagine the people pulling out right now that are just doing stupid
but that was
stuff.
people were reacting, especially those that don't have an advisor, because they were looking at their 401ks or whatever it was, and they're like, oh my goodness. This is going to get worse. This is going to get worse. And there were some people predicting.
In their 30s and 40s.
There were Great Depression 2 calls. There were people saying we're headed for another Great Depression.
Like, how sad is that? Because, I mean, think about that. People removed themselves, right? I mean, they took themselves out of the market, and they lost. I mean, they lost out. So it's really depressing. So it's really important. Voices like yours are kind of, more positioned for that. But even more importantly than that is technology, and how technology can allow an advisor or a firm not only to communicate the concept of hold, right, or the concept of you're okay, but how you can interact on a much more meaningful basis, especially in this new world following the COVID pandemic. So when we get back from the break, we're going to talk to Michael a lot more about how technology and how advisors can use that technology to calm during corrections like we experienced last week, and also just how we should interact going forward in the future. Welcome back from the break. We have Michael from Baird here in the office, and we've had a fantastic segment actually on kind of the market and kind of how you communicated to the investor public around thinking about the market. And what a great avenue into talk about technology, right? And we've talked, obviously we cover technology. We're Naviplan. This is what we do, right? We offer that kind of advice technology to the clients, but the shift is really happening and rapidly. So, when you think about the market and you think about clients, investors reacting to the market, how does technology solve that? And we would love to hear some examples, especially about how Baird solves that with their technology.
Yeah, we can talk a little bit about my view of the intersection, and then a little bit about how we're engaging in kind of a post-COVID world too. So I think that's a good kind of one too. Here's how I think about this industry, particularly wealth management. It's a wealth management experience, okay? An experience. Like, there's a difference between coffee and Starbucks coffee. What's the difference? Like, you can get coffee anywhere. You can get a $1 coffee at a gas station. You can get a $1 coffee at a local store. But you can go to Starbucks and get a $4 coffee. Why are you going to Starbucks to get the $4 coffee? Well, you're going in because of the experience, right? You're getting the experience, the smells, the way it looks, the people, the menu, all those things. And wealth management, same thing. We want to build a good wealth management experience. And one of the things I love about your podcast, other than the two of you guys, are awesome, is the name, right? It's the planning desk. It's not financial plan. It's financial planning, right? It's nonstop. Mm-hmm. You don't show up like Charlton Heston with a couple tablets etched in stone and be like, okay, here's your plan. You're engaging in a wealth management experience. You're engaging in planning. So we want to be thoughtful about the intersection of planning and technology. So we want to kind of reinforce the human advice with the digital platform. Sure. Digitally enabled or digitally enhanced advice. And I think that is a good way to view where wealth management itself will head. So, and how we're kind of engaging with clients now, COVID threw us all into our homes, right? We ended up in our homes, and we ended up having to rapidly adapt to Zoom and WebEx and being able to do client meetings digitally. And that's important because not only did COVID push us forward in a lot of things like migration patterns and work from home, but it also pushed this industry forward into digitally enhanced advice. And advisors in the future, advisors now and in the future will have a suite of tools that will help them create that wealth management experience.
So I think when we think about the first introductions of digital advice and the robo movement going back, probably almost 10 years now, but there was an immense skepticism and also a little bit of fear on on the part of advisors to, whether not necessarily are they going to be replaced, but how is this going to make that, how's this all going to work out together? Now that population has shrunk significantly, but there are still, a lot of people out there that question how this whole thing is going to work together with digitally enhanced advice and whether that is starting to push out the human aspect of it. But I think the human aspect is probably as important as it's ever been. So can you talk about how those two things can harmoniously exist together?
The takes around robo-advisors were
hilarious.
were heady, right?
I loved it.
I mean, there was
Loved it. I love bringing those back up.
Finance Twitter, which we're all part of, and I know you and I interact on a lot. But I remember whole stretches where robo-advice was like the number one thing. Let me give you my take on robo-advisors. I think it adds to our industry. I don't think it's subtract. I think it's growing the pie, not shrinking it.
Sure.
It's showing us that there are people who need help with investing.
Mm-hmm.
They do, right? I need help. You need help. The average person needs help. Their entry into the advice world will probably come through robo-advisors,
mm-hmm.
right? That's probably where you would start. But as your situation gets more complex, as you need better planning, as you need better advice, you transition to the full wealth management experience. And,
yes.
and that's what the real take is on robos. But technology in and of itself is going to be super important, I think, not only for current advisors to think about, but future advisors. And I'll give you a quick story. I think there was an article in New York Mag, Stack Your Stonks with NFTs. It was this really crazy. It was this great article, and there was a woman in it who was seeking out advice. She was seeking out wealth management advice, and she was interviewing advisors on. She was interviewing advisors on Zoom. She was interviewing advisors digitally, and you can read this in the article. I think she's like, I'm the ideal wealth management client. I'm well on my way on my career. I've got some wealth based on this IPO that I was a part of. And this advisor she was interviewing just ended up trying to share his screen on Zoom, and he just ended up sharing everything. So she was looking at like his whole screen and looking at all the wrong stuff she probably shouldn't have been looking at. And she's like, well, I'm going to engage with a wealth manager that technology seems to be kind of a struggle with. And that lesson to me was important because digitally enhanced advice, digitally enabled advice is important. We need to be thinking about it, the technology around it. But advisors need to be comfortable in using all this technology. So this generation and the next generation who might just want a digitally enhanced wealth management experience with human advice, but they might want just much more of an app or a phone call or a Zoom call.
Mm-hmm.
So these are seismic changes. They're seismic changes, and they're important for us to be talking about and to be thinking about.
I'd like to punctuate something before I comment on the robos.
Yeah.
Michael, what you just said, I think needs to be kind of celebrated, right? Digitally enabled advice, probably the common nomenclature, right? It's kind of what people say. But I love digitally enhanced advice. Why? Because that still reminds us all that the advisor is at the core of the advice relationship. And I hate that bionic advisor and the e-advisor. That's all nonsense. But really, technology allows an advisor to not only expand their practice, be more efficient, but be present technologically, especially in times that we just experienced. But it's funny. I was at Schwab Impact, and we talked about the decade of disruption, and the first robos came out back in 2010. And I remember the predictions, and I won't call out the analysts because some of them are good partners of ours, but their predictions fundamentally were wrong, and they were a massive failure on the predicted AUM growth and everything. But I will say two things about the robo, which I think you pointed out, but I want to ask you on this topic. Two things. One, it is a lead generation tool. It has brought more investors into the pond of investment advice, right? For advisors to attract, right? So that's number one. Number two, it has done something that has forced advisors to be more technological, and to be more design-focused, design-centric, right? Because if the robos didn't show up, where would we be technologically? What would we look like, right? We'd probably be moving forward, but not as fast as we should have. So on the topic of lead generation and kind of the digital experience, what are you seeing at maybe Baird or with investors and how they desire technology now, especially in a post-pandemic world?
Right. In a post-pandemic world, you're going to have all sorts of different needs from different sets of clients, and a wealth management firm will be thoughtful about all the different segments and what they kind of desire. Think about websites, right? We started with websites that probably showed you your balance, what the market did, and maybe like what your transactions were.
Statement PDF.
Right?
Like,
So maybe you were delivering those via PDF. Maybe that was the start of an interaction, digitally enhanced interaction. Then, we moved to more advanced websites. Then we moved to apps. Who knows what crypto will do? Will we end up with like some sort of like platform built on Ethereum, which is DeFi, right? That's a topic for a whole nother podcast. But this will continue to evolve such that I think, you might end up in a situation in the future where, so say your millennials are now the big clients, or Gen X. I'm a Gen Xer, right? I just happen to be the greatest 47-year-old male to me. Where we're demanding really interactive apps, where not only are we going to be able to see our positions and our planning, but we're going to also be able to interact with you guys via FaceTime or something. Maybe these apps end up somewhere where it's a multimedia digitally planned experience. And I'm excited about the future of that because that will speak to a new generation of investors. They will have grown up on these robos that have really cool UIs, that have really cool like websites and apps and everything, and that will work its way into the wealth management world. And I'm excited for advisors to not only be able to move forward with technology, but to do it in real unique ways that we can't even kind of imagine today.
It's exciting.
So can you talk about how you tailor your communications or your digital strategy perhaps to individual clients? Because I think statistics have debunked over and over again the fact that high net worth people may not want to engage digitally or things like that. I mean, that's just not true, even though a lot of people might think that. But you're famous for how you've been able to tailor communications for the everyday investor. But how do you think about it from client to client, and how does that relate to technology when it comes to how you're introducing this technology to clients, maybe differently than you had in the past, or new pieces of technology? Because Baird, as a client, I can say, has done a nice job in enhancing their technology offerings as well. How are you introducing those to clients, and is it different from client to client?
Yeah, Tom, thanks for being a client of Baird. Really
I don't have a choice. But.
I think you're onto something when you say it's different from client to client. I used to think that I could just show up in wealth management, splash out my style, and that everybody would pay attention. And I was wrong in that sense because different generations engage in different ways. Some people are more digitally native. Some people are still analog. And that's fine. Look, that's fine. I don't want to be the kind of person that says, you can only read my content on Twitter. I'll still produce an email that goes to an email list. I'm happy to produce PDFs if an advisor wants to send a PDF to a client. Like, I know that people engage differently. But I want to move the ball forward. I want to move the ball forward inside of Baird and with my brand. And that is, what is it? Podcasts? What is vlogs? What are YouTube? What does an email look like? I want to be everywhere because if we're going to attract clients of all different ages and types, if we're going to be thoughtful about technology and how its interaction with clients are working, we need to move to a world where you got a bit of content here and a bit of content there. You got a good Twitter person who's pushing the brand and its own brand. So, like I said, COVID really pushed us forward. And I used to go on the road a lot and do a lot of client events. You show up in a hotel ballroom. There'd be a nice buffet over here. I wouldn't get to eat it. The clients would get a nice little run of the buffet. We'd do a talk, shake some hands, and that was a traditional client experience when you're updating them on the markets or technology or anything. And COVID throws us into the world where now I can deliver that in a hyper-personalized way. I can deliver that via WebEx or Zoom or whatever the chosen platform is. I can have an advisor group say, hey, come speak to these 6 clients. They're really worried about the election. Come speak to them. And I can do that instantly from my home in a really highly professional way. I don't think that will take over. I think we will still have the in-person events. I'm hoping that you guys are throwing conferences again one day. I'm hoping we can get together. Because that builds a lot of creativity in our community. But I like the fact that I can deliver into my client's home, into their iPad and their chair, part of a meaningful wealth management experience. And I can do it in my style that is complementary to Baird's other experts.
Mm-hmm. And for the record, I'm sure I would be a client whether I had the choice or not. Excellent. Baird, one of Milwaukee's best stories. I mean, worldwide brand, but the fact that it's from Milwaukee, I just love that. Tony, you haven't asked a question.
Yeah, no. So it's actually funny you talk about in-person events and all the interactions of old, right? And let's talk about Advisor Gamma, right? Because I think that like the digital side of things. So this is the contrarian point of view. There's a lot of advisors that say, you know what, I don't need technology. I don't need a flashy portal or video stuff because I am their advisor. And I know that. And there is a point about gamma that remains true, right? The empathetic point, right? The point of interactions, understanding that person in a very intimate way, right? Because you cannot experience some things digitally around reactions to news, what have you. So for those naysayers around technology that say, no, the advisor's important, and you kind of alluded to it, the next generation of investors, but just think about like the efficiencies around technology too. Like how can technology not only, because it's an augmentation, right? Like you said, it's an enhancement. How can that make even those very successful advisors better in their practice?
It really just comes down to the intersection of a planning experience. And I do lean into experience a lot. You've heard me say that a couple times.
It's so right, though.
That's what's important. That's what's important in wealth management is the experience. The experience can be everything from what does my advisor's office look like? When I get there, am I comfortable? Right. When I get there, it's a friendly face. I know him. He knows me. I've been in this office. I feel safe here. That experience is what drives all kinds of businesses. And as we talk about that intersection, it has to be focused on amplifying the human part of it. And the advisors who are maybe further in their career that say, I'm doing what I'm doing, I have a successful career. They might say that, but they are successful for a reason, and that's because their human interactions are so powerful.
Sure.
And their clients trust them so much. I think about like this intersection of humans and technology is you could put me at the wheel of a Boeing 737 and you could say, all this technology in front of you is available for you to land the plane. And I might succeed. I probably won't. I probably won't, right? I might hit the wrong button. The plane might turn upside down. If you sit a co-pilot next to me and say, here's the technology that sits in front of us, I'm going to talk you through the landing, I bet I succeed. I bet I really do succeed.
Sure.
And I want that intersection to be a part of a wealth management experience, which is why I like talking to people like you. I like talking to companies about what's going on in technology. How will it change how advisors interact? Because I want to be kind of thoughtful about that. So when I engage with advisors, Baird has hundreds and hundreds of advisors, and they're all kind of running their own practices and using technology. And I want to be knowledgeable enough to say, hey, have you thought about this? Have you thought about that?
So it's actually really interesting you bring up a point. And obviously the news a few weeks ago that Naviton was acquired by InvestCloud. Something that's really, really critical, and you talk about client experience, right? And there's a technology side of it, there is an advisor side of it, and there's just a general environmental side of it, right? And I love the point you made about you walk in an office, you get a certain experience, right? There's brand colors, there's furniture choices, furniture choices, plants, whatever that is, right? That's your experience. Remember Midwest Express, they made the cookies, are their experience,
It builds brand loyalty, right? That
right?
builds brand loyalty.
So what's so exciting about, the InvestCloud concept is that they create a technology that's highly configurable to those different experiences, right? Because as we move forward as an industry, if you're buying out-of-the-box software and you're not manipulating it in a way that creates that true experience that your investors expect, right, there's going to be that disconnect. And it's even from word choice and vernacular, but how you provide advice. So when an advisor is looking for software or think about that experience, that really should be something they consider.
Not only should they consider it, they should consider who the target is too, because I don't know what the future holds. I wish I kind of did. I wish I could see, because then otherwise I would just, I'd buy whatever cryptos that's going to quadruple over the next month. But they should be thoughtful about what kinds of people they're servicing, what their brand, who it is they're targeting. I can imagine that my son, who's 15 right now, is going to want a different wealth management experience than my parents do it. And I know that's the case. It's definitely going to be the case.
Sure.
But there are some things that will stay the same. Jeff Bezos always gets asked what's going to change about the future. He says, well, let's talk about what's going to stay the same. My son will have things that stay the same with the current generation of advisors and their clients, and that is sitting down with that person who knows you in and out, who just knows everything about you, and it's custom crafted this experience for you, and is telling you do you, not somebody else. This technology that's being developed from all across the board, whether it's the apps or the planning software, or whether it's the money transfer systems, whatever. I'm excited about where these things can go, because my son might end up with an experience where he lives in Idaho and his advisor lives in Milwaukee, and he's at the top of a mountain and he needs to have a quick interaction on his financial plan, a goal changed, and he can just pop up almost a Star Trek style app where he's able to get that wealth management experience. And he'll never leave that firm. He'll never leave it. And a firm like ours is always thoughtful about it.
How much fun was that, Michael? This was fantastic. The funny part is that we're sitting here talking. Our camera batteries are melting. Our video cards are melting. We could go. How much longer could we go? We could do
a lot.
10 episode series on this. So we're committed to having you back. Thanks. But in the meantime, right? It's important to point out everyone should follow you on Twitter at Bull and Baird. And your blog is bullandbaird.com. How simple is that?
Easy to remember.
So simple, so easy to remember. We, of course, have our Twitter, at the Planning Desk, of course, Burmeister Tom, and at Anthony Steek. You know what's sad, Tom? We're gonna take a little time off. Not being my co-host, but we're taking a little time off. We have some vacation scheduled. We got some trip scheduled. We're going to LA.
Finally nice weather in Milwaukee.
Finally nice weather.
Yeah, exactly.
Everyone's disappearing.
Let's go to LA when it gets nice.
We're going to LA, right? So with that, I think we'll be back in maybe about a month with another episode. We're not exactly sure. Sounds about right. Good. So sit tight. In the meantime, make sure you catch up on all the episodes that we've had in the past. Make sure you follow Michael on Twitter. At the very least, follow him on Twitter. And sit tight. Stay tuned for the next episode of the Planning Desk podcast. I'm your host, Tony Steek, with Michael Antonelli and my co-host, Tom Burmeister.
Take us out on Purple Rain.
Planning Desk out. Yeah.
Take us out on Purple Rain. Take us out.
Prince is very litigious.